Alrighty. All right, what's going on, everyone? Good morning and happy Monday. Welcome back to the greatest game on earth. I happen to think the greatest game on earth. But all right, quick sound check. Make sure we are rocking and rolling. As always, hope everyone had a good weekend. Hope you had some good family time. I hope your dog got a few walks. My dog definitely got a few walks. But all right, y'all, we'll jump in. It was an interesting week. Interesting week last week. We heard from our buddies at the Fed, JP and the boys. We had a few big earnings. Nothing huge, but a few big ones. Amazon, Apple, Google, Microsoft. A few heavy hitters. And then I'm trying to think what else. A few economic reports. It all made for an interesting week. So first things first. We got the indices here on the Big Three board. Any immediate problems heading into this week? Right? Any big issues, any big red flags? And the answer is no. The answer is no. The monthly charts, perfect. S&P 500 from your monthly chart down to the 15, you got that perfect 10 out of 10. Momentum good, structure good, trend strong. QQQ, almost perfect 10s across the board. And then check out the Dow. I'm not sure who the Dow's trying to impress, but 10 on the monthly, 10 on the weekly, 10 all the way down to the 15. So yeah, no immediate issues. No major red flags. I think the biggest thing to be, let me get a weekly chart here. And it's one of those things, guys, where it doesn't matter until it matters. If you look at a few weekly charts, and again, everything's super bullish, everything's really strong, it comes down to probabilities and sustainability. Probabilities-wise, when the S&Ps, the QQQ, the financial sector, the healthcare sector, big tech, the semiconductors, when most of the market is up here at 2.5 to 3 to maybe 4 weekly ATR, probabilities-wise, it's not going to be sustainable. And we're trying to think a bit more in terms of, what kind of disciplines, what kind of mindsets are going to serve me well over the course of my trading career versus what works today, what works this week. And today might be the day, this might be the week where everything's extended, everything's at 2.5 to 3 ATR on the weekly, and they just keep going for it. 3 turns into 3.5, that turns into 4. Market going to do what the market want to do. Probabilities-wise, just something to be mindful of. Everything's really bullish. Everything's really strong. I would say, in my experience, 7 times out of 10, when we're up here at these extensions, it doesn't mean we have to pull back. Doesn't mean we're on the verge of a huge, nasty reversal. If anything, it's just a spot where the market might do the unthinkable. Take a chill pill, take a little bit of a breather, and maybe not necessarily slam on the brakes, but potentially the market takes its foot off the gas. S&P's above the 3. QQQ. Trading right at weekly 3 ATR. The tech sector, XLK. Smooching +3. The semiconductors. Right up under +3. The healthcare sector. Not quite at +3, but not all that far. The frisky financials. Right up there at weekly 3 ATR. So again, it doesn't matter until it matters. Just as traders, just as risk managers, again, something to be mindful of. Risk reward wise, is that my favorite spot by the financials? Where my risk is 2.9 and my reward is 0.03. It's not going to be my favorite spot. I can make that work if I've got like a 95% win rate. I don't want to bank on a 95% win rate. Now compare that to, say, the daily squeeze in Shop. So we picked up some Shop on Friday. That's a little bit more like it. I'm risking 1 to make 2. Is a baseline, that's pretty much what I'm looking for. Worst case scenario, I want to risk 1 to make 2. Better yet, I want to risk 0.5 to make 2.5. I want to risk 2.5 to make 3, trying to get on the right side of risk reward. But as far as big problems, we've got none. We have got none, my friends. Now, another chart that fall into the category of doesn't matter until it matters, the dollar, the old buckaroo, which is pretty strong here this morning. So, interestingly enough, when the dollar breaks down back here in October, November, that was pretty much the start of the rally for the market. Off goes the S&Ps, off goes the QQQ, off goes your AMDs, Nvidias, Googles, Netflixes, and down goes the dollar. So I think a little bit interesting, if nothing else. We've reached a point where things are pretty extended. And then over here in the background, the dollar's been playing a little bit of cleanup. Sneaky, sneaky stuff here. Momentum bottomed back in December. Up goes momentum through the 0 line. And now you're getting some improvements in your structure. Price is back above the 21, back above the 50, back above the 200, 21 back above the 50. And as of this morning, a daily squeeze fires to the upside. Now, that might be a total non-event. The market might not care in the slightest bit that the dollar is trying to shape up and pop into higher prices. Again, doesn't matter until it matters. I think just something to be mindful of. Very strong market, but very extended market. The dollar looking a little bit frisky. Squeeze fires long, buy signals on almost every time frame. Might be a non-event. Might be a big deal. We about to find out. So a few other things here. Now, selfishly, just speaking for myself, we're at the point where I would love a pullback. Nothing would warm my heart more than the S&Ps coming back down, the QQQ coming on back down. Give me some Microsoft lower, Nvidia lower, AMD lower. Reason being is I'm running out of things to trade. If we jump over to the money makers, no lack of strength, no lack of things that are 10 out of 10, picture perfect. What there is a lack of, bigger time frame squeezes. My favorite swing trade setups. 30, 45 days till expiration, out the money calls, out the money debit spreads. For that kind of trade, I'm looking for a weekly squeeze. I'm looking for a 3-day squeeze, a 2-day, or a daily. Now, the problem with a really strong market, things don't chill out long enough. Things don't take a breather long enough to actually pull back and give you a brand new squeeze. Is it a good problem to have? I suppose. But again, selfishly, I would love a pullback. So as far as big squeezes, one that still jumps out to me is Google. I still love that Google weekly squeeze. And Google had earnings last week, of course. And the earnings dump takes it right back into the heart of the weekly squeeze. Now, this time around, it's a little bit different. Meaning when we're buying it back here, everything in the market was a little bit more fresh. Things weren't as overbought. Things weren't as extended. It was actually a little bit of the opposite. Google in a nice weekly squeeze. Meanwhile, the QQQ gearing up for a nice push. Meanwhile, the S&Ps are gearing up for a nice push. This time around, a little different. It's a perfect weekly squeeze. You've got it pretty much right where you want it. A+ setup, 10 out of 10. Really good risk reward. It's just that we're getting Google right where we want it, while the S&Ps, while the QQQ might be a little bit cooked. The quality of the setup points towards Google heading towards 155, 160. I guess my bigger question for now is, can Google head to 155, 160 without a bigger pullback in the market? If the S&Ps can make it to 3.5 ATR, 4 ATR, 4.5 ATR, maybe Google's ready to go for it now. Instead, if the S&Ps take a week off, right, they pull back a little bit, they catch their breath. QQQ pulls back a little bit, catches its breath. It doesn't mean Google won't eventually fire to the upside. Just means it might not happen as quick as you'd like it to. So I'm definitely going to keep an eye on this, but as far as, do I want to jump in and buy calls right away today? Even though it's a perfect setup, I don't love where the overall market is. I can buy Google today. QQQ can gap down 3% tomorrow. Nothing's changed. We're still in a bull market. Structure is still good. You still got buy signals. So I think the biggest thing for Google here is going to be the timing. Where I really want to jump in, and probably jump in with pretty good size, would be if the market's pulled back first, perhaps back to a daily 21, everything catching its breath, and then we take a look here at Google. But as far as weekly squeezes go, chef's kiss, top shelf. So we got Google, and then there's not too much else. Apple's got a 3-day squeeze, but I'm not going to be in a huge rush to buy Apple. The daily score is a -3. The 4-hour score is a -2. The hourly is a -5. My preference is give me something like NVIDIA. 10, 10, 10, 10, 10. Nothing but 10s. We have let me see, what do we got here? Then there's Shopify. So Shopify is a bit more what I'm looking for. Good looking scores. An 8, an 8, an 8, a 7, and a few more 8s. So pretty much everything's 2 or 3 points away from perfect. All right, I like that alignment. Now, how can I trade that? How can I express my edge? I can do that via the squeeze. And to my benefit, we've got 1, 2, 3 of them. 3 of those bad boys. So on the daily chart here, we've got the slingshot squeeze. Slingshot meaning what? Momentum broke. Structure never breaks. 200 trending higher. That's bullish. The 50 is trending higher. That's bullish. The 21 EMA is trending higher. That's bullish. 21 above the 50 above the 200. All of that is bullish. So they might have broke momentum. They never touched the structure. A big old gust of wind came through. It did not knock down the Shopify house. All right, good foundation, good structure. We stand strong, and if momentum can cross back above 0, that can give you that slingshot squeeze. Pull back on momentum, pull back on the price. Structure stays perfect. Snapperoo, right back up she goes. So if we can get this through 85-ish, I think pretty quickly that wants to head up towards the upside target. Right around 89 to 90 bucks. Daily slingshot squeeze, and then the 2-day squeeze is perfect. She is a beauty. 10 out of 10. Pretty good risk reward. 1.2 for 1.7. And that also gives you an upside target of 90 bucks. But again, we have to take the market into consideration. My favorite time to find a setup like this, 2-day squeeze, good entry, buy signals. My favorite time to find a setup like this is when the S&Ps, the QQQ, the indices are pretty much in the same exact spot. To me, that's the ultimate moment in time. I've got an individual stock, perfect squeeze, perfect setup, everything pointing towards a push into higher prices. And then, man, at the same time, I got the S&Ps doing the same thing. At the same time, I got the QQQ doing the same thing. That's when all the stars have aligned. Shopify gearing up for a push, the entire market gearing up for a push. We're not there right now. It's a little bit different this time around. Shop is perfect. And while the market is very strong, it's not a fresh move. Shopify is building up energy. The S&Ps, the Qs, the market, they've already released all that energy. Doesn't mean Shop can't work. Doesn't mean the S&Ps can't go up every single day this week. Again, just probabilities. This time around, I'm going to trade Shop a little bit smaller, just in case the market does pull back, where if I found Shop going back a few weeks ago, while the S&Ps are in a squeeze, gearing up for another push, then I'm going to take Shop, and I want to take it with a little bit more size. At that point in time, the market says, hey, I'm going to give you a little bit of wind at your back. A little different this time around, where maybe we got another $40 in the tank. I don't think all that crazy to think we're going to hit 5,000 this week. It does feel like a bit of a self-fulfilling prophecy. But the point I'm trying to make is in the short term, I think there's a decent chance we're closer to the end of the move than the beginning of the move. And you want to keep that in mind as you're going through all your individual stocks. Market first and then your stock. Indices first and then your setup. Shopify might be gearing up for a fresh move. QQQ, not so much. S&Ps, not so much. So the translation of all of that in plain English, scale down your position sizing. I think that's the best thing you can do. Don't put yourself in a position where you're getting long Shop, you're getting long Google, you're getting long ABC. And then the inevitable happens, the market finally pulls back, and you're taking on all kinds of damage. Don't put yourself in that position. Trade things small enough where, hey, if the market keeps going for it, and the S&Ps are blowing through 5,000, QQQ is blowing through 430, and boom, off goes Shop. All right, cool. I'm going to make a little bit more cash. I've got me a little bit more profit coming through. But trade it small enough so that if the market does pull back, Shop can't take you out of business. I can't tell y'all how many times I've seen that, and personally how many times I've done that to myself. All right, I'm in a bull market. Things are strong. We are never pulling back. And I'm going to buy Shop with 15% of my account. Hey, if the market keeps going, beautiful. I'm going to feel really good about that Shop trade. If the market just simply catches its breath, pulls back a little bit, that 15% position size in Shop could leave a little bit of a mark. So scale down your position sizing, be patient, take consideration to the fact that potentially we are closer to the end of the move than the beginning of the move. And now with all that being said, I don't think we got this close to 5,000 just to tuck our tails and pull back from here. So though we're pretty overbought, I think a good chance this week, there might be another 30, $40 in the tank. Get the job done, complete the mission, rally a little bit more, and smooch that 5K. The kiss of death at 5,000. So I do want to look for a day trade for that. Something cheap, something with a good risk reward, and ideally something based on a lower time frame. So a good example could be We're sitting here this morning, we're sitting here today, and then you get your first 15-minute squeeze, first 30-minute squeeze, hourly squeeze. I want to try to find something on a lower time frame that can give me the entry for the push into 5K. So visually, I'm looking for something like this. We might pull back a little bit. Everything just kind of takes a little breather. That next lower time frame squeeze might be the 1 hour, might be the 30, might be the 15-minute. The 15-minute. I think that next lower time frame squeeze, that might be the entry for the push into 5K. If we got good structure, we got buy signals, we got all the fixins, I am going to look for that for a day trade. So checking out the futures here. Take a look into the future. It's a bit of a tough read. 1 hour squeeze, 30-minute squeeze, and a 15-minute squeeze. And we don't have the greatest alignment in the signals. The weekly, the daily, the 4 hour, they're bullish. So the big boys want to go higher. The middle of the pack in between, they don't know what they want to do. 2 hours neutral, the 1 hour is neutral, the 30-minute is neutral. That doesn't give me any edge trying to call for a long or call for a short. My 15-minute and my 5-minute are bearish. It's a little bit too much tug of war. Imagine instead we've got a 1 hour, 30, 15-minute squeeze, and every time frame's got a buy signal. From a weekly chart all the way down to a 5-minute, the bulls are just locked and loaded. Doesn't mean we're going to break out, but probabilities-wise, it all kind of points towards we are. Or vice versa, your daily chart down to your 5-minute, everything's got a sell signal. Okay, it doesn't guarantee the squeeze break short, but probabilities-wise, it might be a pretty good chance. And that's the importance of that multi-time frame analysis. I want to have that clarity to call for direction, ideally across every single time frame. How it currently sits is a little bit tough. Okay, I've got a few sell signals, so I could look for a short. But it's a 5-minute sell signal versus a weekly, daily, 4-hour buy signal. I got to give a little bit more weighting to my bigger time frames. The 2 hour, 1 hour, 30 being neutral. I don't know what to do with that. Not enough edge to get long, not enough edge to get short. So from there, I just sit and I watch. I sit and I watch, and I play the over-under game. Are we above our 21 EMA? Are we below it? If I'm below it and I've got nothing but sell signals, I got to look for a short. If I'm above the 21 EMA and I've got nothing but buy signals, I've got to look for a long. When it all sits like this, I don't want to do too much with that. The big boys say, hey, let's go higher. The little guys say, hey, let's go lower. The in-between's going through a bit of an identity crisis. Do I have a setup? I've actually got 3. 1 hour, 30-minute, 15-minute squeeze. Do I have the clarity and the edge to call for direction? Not quite. You got to wait for that. And you might get that at 10 o'clock. You might get that at 11 o'clock, 12 o'clock. There might be days where you never get it. And those days, my friends, are the days where if you don't take a single trade, I think you did your job, and I think you did a good job of doing it. So that's what I got for you all this morning. Very strong market, very overbought market. We're about 1% shy of that big 5,000 SPX. I think we could get there. If you want to look for a day trade to play for a push into that level, anchor to a lower time frame. Ideally, you find a nice lower time frame squeeze, and you want clarity. Clarity in your signals, clarity in your indicators to try to call for direction. And then swing trade wise, just in my opinion, scale down. A lot of good looking names out there. A lot of good looking weekly squeezes, a lot of good looking daily squeezes, a lot of things we could look to trade. If the S&P was in a daily squeeze gearing up for a big push, okay, I think we trade these things with bigger size. Being that I think we're closer to the end of the move, I can still take Shop, I can still take Google, I can still take anything, but I'm going to scale down. I don't want to be the guy where tomorrow morning we all wake up, the bull market is pulling back to the buy zone, and I'm taking it on the chin in a big fashion. The worst part about that, I'm robbing myself of the opportunity to buy the market where I should buy it. I don't want to do that. It's one of the worst things you can do. Your bull market is pulling back to the buy zone where you can get a much better entry, a much, much, much better risk reward, and you're not ready to take advantage of it because Shopify is kicking your butt and the QQQ calls you bought it plus 200 ATR are kicking your butt. I don't want to be that guy. So, shall not be a dull week. I am looking forward to it. And we'll take this bad boy minute by minute, hour by hour. But all right, y'all, any questions, anything you want to take a look at? I am your guy. And I'll get going to the chat here and see what you got. All right, futures. What do you want to do today, huh? What are we thinking today, futures? A breakout day? A breakdown day? Or perhaps a break everybody's heart day and do none of the above? Does anything have a negative divergence? Good question. The biggest negative divergence I saw going into last week was the hourly chart on the SPX. Now, obviously, it didn't matter too much last week, but that was one of the bigger ones I saw, where momentum tops out back here, and we're running out of gas, running out of gas, running out of gas, and they just keep pushing it higher. Down goes momentum, up goes the price. So we did have that divergence. The push on Thursday and Friday, as far as the hourly chart is concerned, it did fix that. Momentum bottomed, big pump, back above zero. If we look at daily momentum, there's different ways to look at divergences. To answer your question, yes. Is a general statement the market is going higher on declining momentum. Take the daily chart, for example. Is momentum above zero? It is. But bigger picture, we're going higher on declining momentum since what a crazy market, since Christmas. Momentum going down. It makes a lower high. Momentum going down. We're making another lower high. So far, the market could not care less. Hey, we don't need momentum. Up, 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 and away we go. If you check out the QQQ, the almighty, I throw it into the category of things that don't matter until they matter. We can have divergences. We can be crazy extended. We can have sell signals. Doesn't matter until it matters. But to answer your question, yes, we are seeing a lot of this. Momentum overall on the decline. 4, 8, 12 weeks, and they keep on pushing the thing higher. So what I would say, at any point in the short-term future, like next couple of weeks, the month of February, should daily momentum go back below zero, then I think we're going to get a big pullback. It all comes back to sustainability. Is the market going higher in a fashion that's sustainable? When you're going higher on declining momentum, and you're up here at these big extensions, especially on the weekly chart. Let me, I'll pull up the weekly here. The weekly's not too bad. You throw that onto the list of things to be mindful of. Would I short the market because we're extended? No. I would never short the market just because we're extended. Would I short the market because we have divergences? No. I would never short the market because we have divergences. However, the combination of those things, as the days go by, as the weeks go by, as the months go by, they can lead to the inevitable. Everything's really strong, but as far as sustainability goes, everything might be running on borrowed time. How does crowd look? CRWD. All right, what does the board got to say about crowd? Pull up the clean here. All right, CRWD. The board likes it. The big bad board likes it. All right, good looking scores. No monthly squeeze, no weekly squeeze. No 3-day, no 2-day, no daily. You got a 4-hour. You do got a 4-hour. So let's see, crowd on the 4-hour squeeze. To your benefit, it's not too overbought. Yeah, nice 4-hour squeeze. In my opinion, in the absence of a daily squeeze, the 4-hour is pretty much the next best thing. One notch lower, one time frame lower, and they can definitely pack a punch. You have a 2-hour squeeze, a 15-minute, a 5-minute. To be completely honest, guys, I don't think our stock picks matter this week. That means your stock picks, my stock picks. I like Shop. I don't think this week is going to be about Shop or about Crowd or about Microsoft or about Google. I think it all just simply comes down to the S&Ps and the QQQ. Now, with that being said, if the S&Ps and the QQQ keep on pushing, in the short term, I don't see any reason Crowd doesn't want to go higher. Good structure, good momentum, good signals. You got a few good-looking squeezes. The bigger question for me would be, just like I got to ask myself with Shop, if the unthinkable happens this week and the market finally tops out and pulls back, do I think Shop or Crowd or Google or anybody can buck the trend? It's not a bet I want to place. Position sizing. Is Crowd worthy of a buy? I think the 4-hour squeeze is definitely worthy of a buy. Based on where the indices are, do I want to trade that with my max size? Like big size, really aggressive, deep out the money calls? Not really. I want to scale things down a bit. Market keeps pushing. Crowd breaks out. Awesome. I'm making a little bit more. Market pulls back. QQQ pulls back. Crowd pulls back. My preference is it breaks out. But because I scaled down my position sizing, it can only hurt me so much. So I really think that's the biggest key this week. A lot of good-looking setups, a lot of good-looking squeezes, plenty of things we could get long. It's a matter of how are we getting long. Are we going balls to the wall, crazy size? I don't think we want to do that with the S&Ps and the Qs at those extensions. So yeah, I mean, if the stock itself is poised for higher prices, you should get higher prices market willing. I think the only thing to rain on that parade would be the overall market. But I do like that 4-hour squeeze. IWM dead. Is the IWM dead? We're going to open up around 192-ish. I don't think I would call it dead, but I don't think it's ready for a huge breakout just yet. The most interesting thing I'm seeing on the small caps, and mind you guys, this could take all of 2024 to play out. But in the background, the biggest thing I'm seeing here, monthly squeeze rather, with a slingshot buy signal. Down goes price. Down goes momentum. Structure is not too bad. 21 above the trending 50. 50 above the trending 200. If they can get momentum back above zero, I think a really good chance that monthly squeeze fires to the upside. And remember, we got that signal on the SPX all the way back in April. There's your first heads up that over time, that monthly squeeze might want to fire to the upside. They took down price, they broke momentum. They don't do a damn thing to your structure. 21 above the 50, 50 above that 200. Momentum found a bottom. Momentum heading back towards positive. Slingshot squeeze. So as far as the map of the squeeze, IWM is pretty much right here. So that's the biggest thing I'm seeing. And there's also, I believe, a 2-day squeeze. Perfect 2-day squeeze, but it's brand new. We're only one dot in. So I think, if anything, just a little bit more chop here. A little bit more chop as opposed to officially dead. Now, for what it's worth, if we're going to lose an index, I think we're going to lose the small caps before we lose the S&Ps or the QQQ. Typically, the little guys, the little fellas, they're going to be the first ones to bite the dust. So something to keep an eye on the short term. Bigger picture, an interesting monthly squeeze and a brand new 2-day squeeze. If they can keep the 2-day squeeze printing and keep it in good standing, again, you might get a little bit of chop this week. But at some point, I wouldn't be surprised if that fires to the upside. And then, imagine if it does. Imagine if the weakest index could actually join the party to the bull side. I'd have to imagine that takes the SPX well above $5,000. If the little guys can actually join the party and get it going. All right, what time is it? Okay, so unfortunately, guys, I got to hit the road. And I will put an alert here in the chat just to give you all the heads up. Unfortunately, I'm not going to be able to go live today for the 10:30 Central session. I'll save you the whole story, but long story short, got COVID back in October, and I never really did anything to address the lung issues. So long story short, my lungs have been really acting up as of late. Like I'm getting short of breath, difficulty breathing, my heart rate gets going. So I'm on a few different meds that are helping out in a pretty big fashion. But I am going to go see a specialist this morning and hopefully get the clean slate of health. So I do apologize for missing today's session. I'm going to talk with Mandy and Jerry. We should be able to find a makeup session this week. So I'll talk with them. We'll figure out a makeup session. And I owe y'all an hour. I owe y'all an hour. But all right, I got to hit the road here and get ready for that. So as always, I appreciate all your time. I apologize for cutting things short. I'm trying to think schedule for this week. So Mastery members, we'll be live tomorrow, typical time, 10:30 Central. Wednesday morning, I'll be back in here for our prep session at 7:45. Thursday, I'm live with the Mastery folks again at 10:30. And then maybe Friday we can schedule a bonus session. Yeah, Friday might work. But all right, y'all, I got to hit the road here. Thank you so much for your time. Apologies for not being able to get back to all the questions. But as a recap, just be mindful of your position and sizing this week. We can be extended. We can have divergences. A million different things can happen. Mama market going to do what mama market wants to do. So don't fight that by getting short. At the same time, if you want to get long, a good-looking setup like Shopify or a good-looking setup like Crowd, do that while being mindful of your size. Right now, you want to shift your mindset to not how much can I make. I think we've been in a very much how much can I make market. Shift that mindset this week. Okay, I've got shop, good-looking squeeze, good entry. I'm going to take it. But rather than thinking about how much can I make, how much can I lose? If I buy shop today, and this is the week the market pulls back, how painful am I going to allow that to get? Do I want to have half of my account in shop? Do I want to have 10% of my account in shop? Or do I want to have maybe 1 or 2%? That way, if shop just blows up in my face, it's not ideal. I'm not going to be too happy about it, but I'm not going to be out of business. Better yet, I'm not going to rob myself of the beautiful opportunity to buy the market on a pullback. It's one of the best things my dad told me when I started trading. He said, son, nothing sucks more than taking damage on the pullback you want to buy. Nothing sucks more. And I said, Dad, I don't believe you, so I'm going to learn that the hard way. And sure enough, I did. But all right, y'all, I'm late. Thank you as always, and I'll see you soon. Adios.